In this question, it is given that A and B are partners in the ratio of 3:2. This is the old ratio. They admit C into new partnership for 1 by 5th share. Remember, this is the share of the new partner in the reconstituted partnership business, for which he brings 2 lakh as his capital and 80,000 as premium for his share. That means he is bringing capital as well as he is bringing his share of goodwill in cash. Goodwill already appears in the balance sheet at rupees 50,000. Now students, this is the value of the goodwill that is already appearing in the balance sheet, and also partners withdraw half of the goodwill in cash. Now students, in this question, it is clearly mentioned that some amount of goodwill is already appearing in the balance sheet. As per accounting standard 10, we know that self-acquired goodwill or self-generated goodwill cannot appear in the accounts of the firm. So this amount of 50,000 on account of goodwill should be written off by old partners in their profit sharing ratio, which is the old ratio, that is 3:2. So the entry for writing off would be A's capital account debited, B's capital account debited to goodwill. The amount that was appearing in the balance sheet was 50,000. This 50,000 will be written off by A and B in the ratio of 3:2. So the amount comes to 30,000 and 20,000. Being goodwill written off. Now students, once this has been written off, then we'll move on to the accounting treatment of the goodwill brought in by the new partner. Now in this case, C is bringing 2 lakh as his capital and 80,000 as premium. So the entry would be bank account, or you may use cash account also, debited to C's capital account to premium. It will be 2,80,000 in the bank, 2 lakh for capital and 80,000 for premium. Similarly, the narration for this can be written, that is cash brought in by new partner C and premium also brought in by him. Now students, whatever premium has been brought in by this particular partner would now be divided among old partners in sacrificing ratio. We must have a clear look at the question in this case, because there is no new ratio that is mentioned here, or there is no mention of any sacrifice made by any particular partner. So in that case, this ratio of 3:2, that is the old ratio, would be equal to your sacrificing ratio. Right students? So remember this thing, in case new ratio is not given or anything is not mentioned about any particular sacrifice. So in such questions, you can always use your old ratio to be equal to your sacrificing ratio. In case you want to calculate it, you can calculate, you will always find that it will come equal to old ratio. So now let us move on to journal entries for division of this premium among the old partners. Now the premium of 80,000 would be divided among old partners, that is A and B. So the entry would be premium account debited to A's capital account to B's capital account. The amount of premium was 80,000 and the sacrificing ratio is 3:2. So we'll divide 80,000 in the ratio of 3:2. That will be 48,000 for A and 32,000 for B. Entry would be, or narration would be, being premium divided among old partners in sacrificing ratio. Now students, again coming to the last line in this question, the partners withdrew half of the goodwill in cash. That means A and B, who have got 48,000 and 32,000 on account of premium, have withdrawn half of this amount. So the entry would be A's capital account debited, B's capital account debited to cash, and the half of this amount is 24,000 for A and 16,000 for B. Total comes to 40,000 withdrawal in cash. So being goodwill withdrawn in cash by old partners. So now students, this question sums it up. In case goodwill is already there in the balance sheet, so we will have to write off this 50,000. Then the entries for bringing in goodwill, division of premium, and lastly the withdrawal of amount by the partners.